Everybody's pretty comfortable right now with what they see in front of them. There doesn't seem to be any significant tail risk that we should be factoring into our thinking this morning. Iran is not likely to respond in a significant way that's going to disrupt global trade. Is that the right way of looking at this?
I think it is the correct way to trade this until we get a fresh development. I don't think markets experts should pretend to be geopolitical experts. All macro traders become armchair experts in absolutely everything under the sun at some brief point in time. But the point is, people who are trading, whether it's stocks or bonds or currencies or around the world, they do not know how or when Iran will respond. Until then, the narrative at the moment is this is being traded as a very successful intervention by the US. The fact is the dollar is strong, Middle Eastern stocks traded higher, and we're seeing subdued reaction elsewhere. And that all piles up to kind of say this is being traded as ending uncertainty around Iran's nuclear program. And therefore, that is a big victory. And therefore, that is the current theme at the moment. And that's the way that it's sensible to trade until we see something to change that narrative again. It's not ruling that out.
You talk about a successful operation from the United States, perhaps boosting some of that sentiment as well. But Mark, I'm curious what that line in the sand is. What would create a more pronounced reaction? Yes, Iran may respond, but it's quite clear that the U.S. would retaliate to any sort of retaliation. What is the response that would trigger a more volatile market reaction?
For markets, look, and there's obviously a very important humanitarian issue here. Conflict is always terrible. So I just excluding that and just focusing on markets. For markets, all they care about is if the Strait of Hormuz is sustainably blocked. We're not talking about disruption for a few hours or a couple of days. We're talking about sustained disruption to the Strait of Hormuz. Apart from that, anything else is a headline that will get faded because that's the only thing that stops regional flow of oil and affects the world economy. And that's basically what people are looking for. So until you see that development, every other headline will cause a risk off, but will then be faded.
Mark, is the dollar back to being a safe haven now? Goldman's saying that the dollar decline may have been overdone and it's up 0.25% on the Bloomberg Dollar Spot Index today.
It's not back as a haven. You've got to remember the US benefits from higher oil prices. It's the world's largest producer of oil. It is much more insulated from oil prices. This is very different from several decades ago. So it benefits from higher oil prices. It also benefits from the support from interest rates in the short term. So I think this is a theme about, sure, there's a slight haven bid. There's a slight flow into the dollar because there's a little bit of de-risking at the margin. And that means a deleveraging into the world's reserve currency, which the US dollar still is. But it's not really performing as a major haven because we're not seeing a drive for havens. We're not seeing a risk-off event. Gold is lower, treasuries are lower, so the dollar being slightly higher shouldn't be mistaken as a sudden new refreshed haven bid for it.